we have officially blown the account. All right, I'm just playing. All right, so if you remember, a few days ago, last week I did have two trades, one on gold, the other one was on oil. Right, so this trade on oil, we had to exit this trade because if you remember, we actually had a very ridiculous amount of swap on this particular trade, because the trade was valued at the current, as of Friday, we were down about 200, close to 240, I think. But by close of Friday, the amount of swap which I was charged was 324. So this was actually absolutely ridiculous for me, because it meant that the account had to work more for it to achieve any sort of profit. And I believed that there was a possibility that by Friday, the amount of swap which would have accrued on this account would have been more than 700, or even close to $900. So that's absolutely ridiculous, considering that the amount of profit I was standing to gain from the account, from the one particular trade, was at least 1,400. That's if prices were able to take profit and if I did not scale into this trade. But since I scale in, this can go up all the way to, let's say, 2,500. That's a possibility. But at this particular point in time, I wasn't willing to gamble on oil. And the first moment that the market opened, and if you remember, we did get some powerful news regarding Trump saying that there was a possibility for the United States and Iran, or Iran, depending on how you like to pronounce it, to actually come to to sort of like a quick deal. So we did receive that, and that's actually what saved us, because as of Friday we were $200 in the red, right around there. But on Monday market open, we did actually get a very huge jump to at least 8% as of Monday morning. So that's just simply the reaction of the market to that type of information. And we did wake up. We closed out at 87 and a half, 87.5, but we woke up at $80. So that was just the current price in the morning. So once the market opened, we took the chance, because by that time I believe we were floating around $126 with the same swap of 224. So we actually did manage to get down the risk on the trade lower, to at least only losing, the trade only costed us at least around 196 thereabout, right? So here's now my views on what will possibly happen, or even though I'm not trading it currently. Right, so if you remember, we right after the article where Trump said that the US negotiators are actually working with Iran officials to come up with some sort of like a quick deal, we actually did get news that Iran stated that there are no such deals, there are no such negotiations or talks with the Strait of Iran. So that's just some of the information that we've been following regarding the war, using the Horizon Bridge Macro Intelligence Dashboard. So the US has made a concession to Iran on Hormuz, but Iran won't open until the war is over. So just things like these are just things that we're looking at within the Strait of Hormuz. So those are all just things that we're looking at. And right now, since we might have the possibility of that happening, I remember I also saw a tweet by the Iranian army, which is a channel that I follow on Twitter. But we did get Iran saying that there are no such negotiations. So right now I'm like in sort of like of an indecisive state on what's possibly going to happen, because if the war comes again, then probably oil might start bouncing back towards the highs, going all the way up until 96, or even breaking this area, going all the way up. So we don't know what will happen there. But if the war actually does come to an end, then there's a possibility for oil to come back much lower. All right, so that's that in this case. And apart from that, we do have a trade on gold still. Of course, we are getting demolished on gold, but we still have an open position on gold. Mainly, we've taken a bullish position because we believe that prices are potentially, they're not going to, but they're potentially going to go to potentially going to go up from where we currently are. So currently we're floating at least around negative 56% of our original risk. I should show it to you on the screen right about now, but yeah, so just looking at the current structure right now, we did get price break above this trend line. But if you know me and the way that I trade, I don't really care about price breaking a trend line. That's not enough of a signal for me to be convinced that a trade or a trend has reversed. So this hasn't reversed to me because this is still a series of lower lows without any proper structure being broken within this. All right, so but apart from that, one thing that we can be sure to look for is the potential break of this area of about 4,200. So that's a very good area that we're looking at currently. We're looking for, and possibly once prices have broken this area, that's when we can confirm that maybe now price has broken structure, and we could label this as a break of structure or a change of character. From there, we'll be looking for long opportunities, taking longs from points such as these, retests from areas such as these as well, the 4,400 zone, so around there as well. So prices are probably are not going to, they don't have to, but there's a possibility or the potential that prices are going to go here towards these areas. And one of the other things that we're looking for exactly is the inflation rate and the inflation rate and the interest rate decisions by the Federal Reserve. So one of the things that happened last week was that the rates were maintained at the current standard 3.5%. So what this has done is that it has still maintained the status quo within the bonds market. So what that meant was that even though it was attractive to trade US bonds, it is not as attractive at the current moment because it's possible that rates are going to get cut if the inflation actually goes down. So we're watching the inflation rate, which comes out on Friday. The non-farm payrolls, which come out on Friday. We're also watching the inflation rate. So non-farm payrolls, of course, can signal to you if there's a possibility for the inflation to be much lower or higher, just depending on this expenditure that people have within the nation. So jobs can actually cause expenditure to either go up or down, which causes inflation to also either go up or down. So we're just waiting to see what happens with non-farm payrolls, and from there we're going to wait and see how the markets are going to react. But by maintaining rates, it means that the United States is not as attractive in terms of investing within the bond market. So let's just take a look at how the US 10-year yield is performing currently. So of course we have gotten some positive moves within this area, but we're getting sort of like some rejection within this area where prices have failed to actually break through multiple times, even though this yes, on Friday we did manage to break above that. But overall, I believe this is long-term bearish. It's long-term, it's long-term bullish, sort of like just consolidating sideways, we could say, at this particular moment. So we're actually touching within these highs around there, but we still have the potential to actually reverse this and take it much lower through there. So we're just waiting to see how the US 10-year yield forms up. So if the rates are ever to get cut, then there was a possibility that the DXY is going to lose its purchasing power. So that's sort of like just some of the things that happens when you get much lower yields than, or much lower yields, or yields that are maintained to the same the same standard. So we actually did discuss about this last week, but yeah, so that's just one of the things that happens. And due to this happening, then assets such as gold are actually going to get more investment. So there's going to be an influx of funds running through into gold. So that's one of the reasons why we are still bullish on this. So we're just waiting for proper confirmation with regards to the possibility, the future possibility, using the ISM purchasing thingy index. So we're waiting to see what happens through that. So let me just, okay, so yeah, I wanted to show you the current. So yeah, so overall that's all that we have. And we currently just have our eyes on gold and maybe silver as well. So one of the things I believe you also need to take a note within this is that we've actually, minus all the talk about reversal not being confirmed, but we've actually also made sort of like some bullish flag, which in this case looks like this. So this is quite a good flag because there's a possibility that this could potentially happen, but still this is dangerous because of this particular price point not being broken, and we could actually just bounce back from there and tank it all the way. So once prices reach around $62 an ounce of silver, or we get prices moving up towards 4,200. So from there is where we would want to set our stop loss to break even, because at this particular price it becomes more risky. All right, so that's that for this video. Thank you so much, and I believe you should watch the next video that I post after this, because I'm going to be discussing some of the things that I normally like to do after after trading for a couple of weeks, consistently, but not making profits consistently. So I just wanted to sort of like give you what I do and what I'm actually going to do in that regard. All right, thank you.